Good morning. Welcome to America First Wealth Management Investment Outlook for February 18th, 2025. My name is Dan Liu. I'm the Chief Investment Officer and Portfolio Manager at America First. This is a standard disclaimer. We're not offering any investment advice or offering to sell or purchase any securities, and these opinions are subject to change based on current data in the markets as of February 18th. And reliance upon this information is on the sole discretion of the viewer. So we'd like to begin with our investment outlook. And just to summarize, for previous week, the S&P 500 is nearing all-time highs. NASDAQ and Dow Jones are also approaching peaks. The investor sentiment, however, has turned bearish at the beginning of the year, with the American Association of Individual Investors survey of bearishness turning up to 47.3%, which indicates that they're expecting declines in the next 6 months. Year to date, it's interesting is large value stocks are leading, and the Magnificent Seven index is now lagging. For the European markets, hopes for a Ukraine ceasefire boosts the markets. The stocks 600 and German DAX hit record highs. Energy prices are expected to drop if Russian gas supplies continue, benefiting energy-intensive industries. For the Asian markets, Chinese stocks are rallying as President Xi meets business leaders. Hang Seng is up almost 14% year to date. Indian markets are declining. The BSE Sensex down 7.5% since mid-December, largely due to foreign investor withdrawals. Looking at the key economic events for the week, we're expecting the Federal Reserve to release their January minutes on Wednesday, and I'll give us insights into further rate decisions that are anticipated. We do have some inflation concerns. U.S. consumer prices rose 0.5% in January, and that's the largest increase since July 2023. That's going to raise questions about the direction of the Fed's interest rate decisions. Will they continue to pause and push out further rate decreases? On the trade and tariffs front, as we know, Trump is announcing tariffs almost on a regular basis, and that's certainly introducing some uncertainty into markets. And there's certainly concerns about the potential impact on inflation and economic growth. Markets are monitoring the U.S.-China trade relations, and certainly there's been a lot of news coming out regarding the AI front in China. Their DeepSeek model that was announced last month has created a lot of volatility among the AI names. China also recently announced a new chip using optical and electronic technology, claiming to use significantly less energy and be much faster than some of the leading chips that NVIDIA is producing. So I'm sure that'll be something investors pay some attention to this week. The Department of Government Efficiency, or DOGE, Elon Musk over the weekend claimed on X.com that there's massive fraud in federal entitlement payments. So that's certainly getting some attention this morning as well. Plenty of key earnings this week. Tuesday, I'm going to run through these quickly. Baidu, Medtronic, Occidental Petroleum, Arison Networks, and Devon. Nice mix of key Chinese companies. Medtronic is a leading medical device company. We'll be watching that carefully as well. Occidental Petroleum and Devon, two key energy names reporting, and Arison Networks, which specialize in cloud networking solutions. That'll be an important name to follow in the area of the cloud companies, which saw a considerable amount of volatility last week. Turning to Wednesday, Etsy, Wix, Rio Tinto, Solar Edge, and Carvana. Thursday, continuing with a key Chinese company, Alibaba, Walmart will be a key report, the largest retailer in the world. We'll be looking at consumer spending patterns quite closely. Unity Software is reporting, Rivian, Newmont, Booking Holdings, and New Holdings. So turning to the Elon Musk claim over the weekend, he said, called Social Security payments could be potentially the biggest fraud in history. And looking at the chart on the right here, he had some of his programmers look at the distribution of ages in the Social Security network database that were not listed as dead. And there was 21 million living Americans over the age of 100. So that's kind of an eye-opener. And the implication is if these Social Security recipients over the age of 100 are continuing to receive payments, 21 million of them, that's a significant number of payments. And online, Elon Musk claimed that those payments were in excess of $500 billion a year for those 21 million potential Social Security recipients over the age of 100. That's certainly an eye-opening number if it's true, and we're waiting to see if there's any substantial evidence of that. He also pointed out that DOGE is uncovering fraud in federal entitlements in Medicare, Medicaid, welfare, and disability. And he claimed that the sum total of those will exceed every private scam you've ever heard by far. And certainly the previous large scam out there was the Bernie Madoff Ponzi scheme, which was 65 billion. So obviously anything in that order of magnitude, 500 billion plus, will make the Madoff scheme seem like a rookie Ponzi scheme compared to the size of this. So we're watching that carefully to see how that news develops. This is the American Association of Individual Investors bearish sentiment chart. And that shows the spike at the beginning of the year up to 47.3%. And on the bottom is the S&P 500 chart, which seemingly ignoring the spike in the bearish sentiment. Some investors consider that to be a warning signal, while other investors look at the AAII bearish sentiment indicator to be contrarian. So remains to be seen this time around if it's a contrarian or leading indicator of future stock market direction. We want to point out, as we did last week, that February tends to be the second worst month on average for the year, with September obviously being on average the worst month for the year. But looking at the current month to date, this is a weekly market stats, we do see a lot of green among the equity indices. Only the small caps Russell 2000 index is down month to date, down 0.34. S&P is up 1.23 month to date. Dow is flat. NASDAQ and NASDAQ 100 are up. Russell 1000 growth and value are up, and international stocks are up, leading the pack as well. For the week, though, previous week, we did see an all green week across all the sectors, despite the higher inflation numbers. The market saw a rally in tech stocks during the week, which ended a period of volatility among the AI names, which was down earlier in the month. Turning to Magnificent Seven names, continues to have choppy results. We had 4 out of the 7 names down for the week, and same thing for the month to date. Apple led the pack, 7.57%. announcing news that they were working with um, Alibaba in incorporating AI technology into their phones. That kind of got the market excited about that. NVIDIA rebounded, up 6.94% and very strong now for the month to date, up 15.6. And Tesla continues to be trading off, being the worst performer in Magnificent Seven year to date. Investors will remember that Tesla had a tough start last year as well, but turned it on towards the end of the year, and we do wonder if that's going to continue to be the case. There's been some misses in the automotive sector of Tesla, with car sales being weaker than expected, and other areas of the business are obviously not contributing as much to the sales and earnings as the automotive industry for Tesla. So we'll see how that progresses with other announcements from Tesla. Meta continues to lead the pack, up 25.8% year to date, and up a respectable 3.1% last week. And this is an interesting chart we put together. This is the year-to-date performance for Magnificent Seven. That's the average of the Magnificent Seven names. You can see the blue chart year-to-date, up 2.08%, still respectable, but everything else is running ahead of it. Small caps, Russell 2000 up 2.23. Large cap growth up 3.68. S&P 500 up 3.96. And running away with it is Russell large cap stocks up 5.05%. So interesting shift of breath. Fortunately, everything's still positive, but we're getting some divergence in the leaders here. Value is getting a good run so far out of the gate this year. Turning to the sector performance for the week, as I mentioned, tech had a strong rebound. Year to date, it's up 3.2%. Year to date leaders are communication services. That's largely led by the run in Meta, which is in that sector. Financials are coming in second, and materials are third. And then in the up 5% year to date categories, healthcare and energy. For the week, though, financials and healthcare were the laggards. Everything else was up in the green. Not a bad week. And we'll see what this week brings. Monday, obviously, was President's Day. The markets are closed, so this is a shortened week. A little less news on the macro front, but a lot of earnings still coming out. S&P 500 index continue its climb. We're still above the 10-day moving average, which suggests we're still in a bullish climb. The RSI is not extended. It's a little bit above the midway. So we do think that barring any significant negative news on the earnings front, or with China, or Russia, Ukraine, markets are likely to continue a steady climb here. 10-year Treasury yields dropped 2 basis points last week. We got through some large auctions, and initial indications were that the auctions were not as strong, especially in the 30-year auction, but the market seems to shrug it off. The auctions were absorbed. 10-year bond yield dropped modest 2 basis points. We're down 11 basis points right now on the year to date versus the 10-year moving average. We do see that the trend is heading downwards for interest rates. Turning to the yield curve, the orange curve on the bottom, February 14th versus December 31. and the previous month, January 31. We are down at the longer maturity part of the curve. However, on the short end of the curve, at 2 years and shorter, we do see that short-term rates have risen. So that's showing a bit of flattening of the curve. And we have here the 10-year minus 2-year Treasury yields showing the flattening of the yield curve. Flattening of the yield curve historically has tended to be bullish for stocks, portending possibility of interest rate declines, but it also does suggest that a recession could be nearing as well. So hopefully the Fed does take those indicators as signals. Turning to economic calendar, Monday again was the holiday. We had a couple of Fed governor speeches. Today, not much to report in terms of significant impact. Wednesday, we got indicators in the real estate markets, building permits and housing starts 8:30 a.m. 2 o'clock will be the FOMC meeting minutes for January, which will be widely watched. Thursday, no, I'm sorry, Thursday we'll have a lot of numbers these are typically reported on Wednesdays. These are weekly inventory and auction data and fully fed numbers. We usually see this on Wednesday. It's coming on Thursday. None of these, I think, are going to be key market moving pieces of data. Friday, existing home sales at 10 a.m. will be important. Again, another sign of what's happening in the real estate market. S&P 500 earnings. I'm not going to spend much time on these. Highlighted the key stocks in the highlight. Excuse me. In the highlights earlier. We'll just flip through these again. Thursday, I think Walmart will be the important one before the market open. And consumer discretionary stocks will be on alert for volatility on Thursday. And that's it for the market outlook for this week. Thank you for tuning in. For any of our viewers and investors, if you'd like to schedule a call with us, learn more about our products and services, please feel free to email me or Jim Monahan. Our emails are listed here. Thank you for tuning in. Have a great week, and we'll talk to you next week.